After the close, we hear from Dutch Bro. I heard someone on air say Dutch Brothers, and I was thinking, Dutch Brothers. I mean, like, he sounded like me when I met my daughter out in Oregon. She said, oh, I said, what is Dutch Brothers? She says, Dad, you're an idiot. But boom, it's Dutch Bro. And that's the coffee chain that's one of the hottest IPOs of the year, Dutch Brothers. Clueless. All right, this is a terrific regional and national growth story. You can put their highly caffeinated kiosk, try the Annihilator. You won't sleep for 3 days in the middle of any parking lot. Something that can revitalize a down-and-out shopping mall. I just worry that the stock's expensive, although it pulled back from its highs this week. I am enamored of it, though. After the close, oh, look at this one. Disney reports it's going to be rough. The theme parks weren't working at full capacity, Delta variant. Shanghai Disney was shut down this past week, stranding 33,000 people because of one person with COVID. The movie slate's good, not great. Disney Plus seems to be slowing. Time for something new. Now, what have I been pushing? I've been pushing a virtual reality fest where you go to a world inhabited by Scrooge McDuck, or maybe, just maybe, this is my new one for them. If they use it on the call, credit me. Maybe you go and you find the killer of Bambi's mom, and you bring him to justice. It's an idea. All right, I don't think CEO Bob Chapek will give that exactly to us, at least not exactly that graphically. But I'm looking forward to the call as we own Disney for the Charitable Trust. It's looking okay lately. It was up 5. Here's a good one, MasterCard. They got an analyst meeting on Wednesday. This stock is sold off and part of the exodus from old fintech, although it bounced hard today. More on that later. MasterCard's another charitable trust name, so we'll give Investment Club members a rundown on the meeting once it happens. But what matters is that this is a play on commerce and cross-border travel. It is not a play on what a firm does. It's not. Get a little emotional. Thursday's quirky. We've seen an incredible rally in all things mall, right? I mean, from Tanger to Simon to everybody in the Tapestry reports. Now, that's formerly known as Coach, and I don't know if it can summon still one more day higher. I think we'll get good news, though, and the stock could quickly surge 7 points to a new 52-week high. Let me throw in Ralph Lauren. That should go to its 52-week high, too. It was down 12 the day I reported. That was stupid. We also heard from Yeti, which makes high-performance outdoor gear. Now, we've been championing this one since 16. It hit a new high and closed at 107 today. I love the line extensions from the Simple Thermos, even as something it's a pandemic play, because people felt safer spending their vacations in the great outdoors. To me, Yeti's become much more than that, and that was brilliant. They got their name out during this period, and now they're selling a lot of different things. Friday, we get results from a drug company that had an early vaccine for COVID, AstraZeneca. It's gotten lost in the miasma of vaccine makers because it wasn't as good as the other opponents. I think they're better fish to fry. Finally, we've had so many new IPOs that I regard as really basically branding exercises, great ways for the public to learn about a story, and I think somewhat, maybe not much more. And that's how I see Warby Parker, the hipster glasses maker, which I warn you away from, but I'd love to be proven wrong by a great quarter. Could easily happen. Usually the first quarter out of the chute is a good one. Here's the bottom line. We need to see if this rosy action can hold up through next week, a period that historically tends to produce some ugly sell-offs. By the way, Larry Williams, the guy who told us to sell today, remember, he said by the last week, he sold today. He's done. What a call. One of our best ever that we've had on the show. But if the earnings stay strong, well, I think the stock market could stay strong, too.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.